Hey everyone, it's Mike from Orderflows here, and welcome back to my channel. I'm glad you could join me for this video. I'm going to be talking about, again, sort of the differences between a range-based chart and a time-based chart, because, I was posting a video up the yesterday or the day before, and, it sparked a bit of discussion in the comments section, because I used in the video an 8-range chart, and, if you've watched some of my videos from several years ago, I was using range-based charts and instead of time-based charts, whereas more recently I've been on time-based charts. So at the end of the day, honestly, it doesn't matter what chart you use. The whole point of choosing a chart to look at is to make the market easier for you to understand. Okay, and today is a great example of settling on, I don't like using that word settling on the chart, but sort of deciding on the chart type that you're going to use going forward. Okay, and in the S&Ps here, we had a low at 45.15 at 1150. Basically, this is a 8-range chart, and again, whether you're using an 8-range chart, a 10-range chart, it's up for you to decide, right? I know some people that like to use very short range charts, 4-range, 5-range charts. You have to sort of decide how you want to approach the market, what your risk tolerance is. Can you accept quick moves going against you? Where you're going to be placing your stop, things like that. Okay, so that all comes into choosing the type of chart. Basically, it just comes down to comfortability. Okay, you don't want to be getting in a trade and getting stopped out too soon, right? You want to be looking at a chart that you can see the market develop and be comfortable with. But on this low of the day here, okay, now we got negative delta minus 83, okay? We got a bullish prominent point of control, all right? And then about 5 bars later, we got multiple imbalances. That's this green box around the bar, okay? The bar right off the low, right after the low, it's got a strong delta into volume, 25%, right? That's why it's colored magenta. Whereas if you're on a time-based chart, it looks completely different. You still have that low at 1150, but you don't have a bullish prominent point of control. And you don't have a strong delta coming in, delta into volume is just 14%. You still got this strong negative one, minus 26% here, right? And here's minus 25%. And a few bars later, then you see the aggressive buying coming in here, 32 delta into volume, right? That's the magenta color. You got 1, 2, 3, 4, 5 buying imbalances, right? And the market starts working its way up. Now, again, there's bullish things happening here in the order flow in this bar at 1156. If you're on a range-based chart, right, you got the bullish prominent point of control, right? You've got the next bar with the bullish delta into volume. Here you've got the multiple imbalances. You also got a strong bullish delta into volume. Okay, so this low, even though it's the exact same low, 45.15, the way it's forming on a range-based chart is different. Now that's, so if you're using a range-based chart, you could have been picking up on this low maybe a little bit sooner than if you're on a time-based chart. Okay, so at the end of the day, it basically comes down to what type of market you're trading and what makes sense to you as a trader. For example, okay, I talk about the bond market a lot, right? Bonds is a market that I strictly use range-based charts on. I can't use a time-based chart. I don't want to go out. I can't use a 1-minute chart, right? This is show you a 1-minute chart in the bonds. It looks like this. For me, it's hard for me to make a trading decision based off of the information, where it's basically trading one price and maybe ticks 1 tick above or 1 tick below. Okay, so I can't make anything out of that. It's not useful to me. I could go to a longer time frame, maybe 5 minutes. I could get some decent useful information on a 5-minute chart. Okay, but I just find it, for me, as as a person, I find it easier for me to look at a range-based chart on a slower moving market, because I know that the chart is forming based off of price movements. Okay, and whether, and it comes down to also, doesn't matter which chart you're looking at, range based, tick based, volume based, time based, you're still going to be looking for the same things in the order flow. So on this 4 range chart, I got exhaustion print right here, I got exhaustion print right here. Right, this one's at 750, this one here is at 843. Okay, we got a 0 print in here, got multiple buying imbalances, stacked buying imbalances actually in this bar. So I'm not, concerned with having to flip through different charts. You decide on what chart you're going to look at, and you stick with it until reading the market off of that becomes a bit more of a struggle for you, in the sense, sometimes, some markets volatility picks up, right? We saw that, if you remember, when the world shut down because of COVID, right? You remember the markets were going nutso, and I knew people that were trading range-based charts in markets like YM. They're using 10 range charts, 15 range charts. Next thing I know, I'm talking to them, the guy's on a 50 range chart, right? Just because of the movement, right? But that's, he had to make that adjustment. And as a trader, right, just because you decide what type of chart you're looking at, you're not pigeonholed for the rest of your trading career into that chart. Because again, if you've watched my videos over time, right, in 2016, 2017, I've been trading with, more range-based charts, but over the last couple of years, I've been on more time-based charts. Now, again, you maybe 5 minutes is not good enough for you. Maybe you want to go to a little bit shorter time frame, but not a 1 minute chart. People use 3 minute charts. They use 2 minute charts. The story of guys, when they left the floor. When you're on the floor, right? You don't. This is back in the 90s, right? They don't have charts that they could just easily pull up while on the floor, because back in those days you didn't have. You had laptops, but no one stood in the pit at that time with a laptop. But guys that would leave the floor, all of a sudden they're trying all these different time frames, 2 minutes, 3 minutes, and made me laugh. Is I heard this. I forgot who it was telling the story about how he was using a 3 minute chart, thinking he's going to have an edge over the people trading a 5 minute chart. Okay, still the same data. It's just formatted differently because you're on a different type of chart. This is a 3 minute chart. Okay, maybe you don't want to use a 3 minute chart. Maybe you want to use a 4 minute chart. Okay, and again, I get emails from people asking how the market looks, on a footprint on a 3 minute chart, or a 4 minute chart. Well, this is a 4 minute chart. Now you're starting to get some price movements. Again, even me, I got, it broken down. I do look at, I don't have it on here, on my testing computer. I even got a 90-second chart, a minute and a half, right? It's people got all sorts of time frames and things that they look at, right? I got 2584 tick chart, right? Because sometimes I get questions of a trader that follows this type of chart and he wants to know how order flow looks on it. Okay, it's still the same information, but it's just formatted differently because it's based off of your amount of ticks or the amount of volume or the amount of time. Okay, and again, you're still going to get that one contract off, like here, whether I was on a, this is a 2480 tick chart. If I was on this is 15-minute chart, right? I still got that one down there. Some of the times these things just really stick out in the order flow. Okay, if I was on a 5-minute chart, I showed you that already. But if I'm on a volume-based chart, I don't know, 10,000. Okay, now it's lumped into with that other one from that happened a little bit around that time. It's 2 there. Sorry, where am I? No, here it is. I was looking at yesterday's. That's yesterday's. This is today. There's still that one. You see on a 10,000 volume chart, if you're looking at exhaustion prints, one up here, one down here, 7, a 2. It's not highlighting here because this is a doji candle on a 10,000 volume chart. That's why sometimes I see people, these price action traders. I think that they're order flow traders. I'm not going to name their names, but try to keep it positive, because it's traders like that help us out. Because when we actually read the order flow, actual volume, it kills me. I see a lot of traders posting stuff on Twitter, on Facebook. Oh yeah, we got bearish order flow, and then they're showing a simple bar chart. Well, how it's one thing to say, well, I got a green candle, so I got bullish order flow. Well, no kidding, right? I got a red candle, I got bearish order flow. Yeah, you got bearish price action or bullish price action, but you don't know the actual volumes that are going through. But when I see people say, well, yeah, I'm going to start with a 4-hour chart and go down to a 1 hour, 15-minute, you want to see this as early as possible, right? That's why I don't really go out beyond a 5-minute chart on the order flow, because by then, if I'm looking at an hourly chart, and this happened at 7:50, and I'm looking at an hourly chart, I'm waiting for things to confirm, by 8 o'clock, there's a lot of movement in between that I could have taken advantage of, right? I mean, people, if you're really a true order flow trader, in my opinion, you're more on the short-term trading than the longer-term trading. So anyway, guys, that was sort of my rant about range versus range-based charts versus time-based charts. Doesn't matter at the end of the day. Don't sit there, say, okay, on this day, Michael's analyzing a 4-range chart. It looked pretty good. Okay, really, what you got to do is you got to experience it, right? Follow the market looking at a range-based chart. Follow the market looking at a time-based chart. What makes it easier for you to understand the dynamics of what's actually happening in the buying and selling, where volume is, accumulating or being distributed or not even trading? Okay, that's the chart that you want, where you'll see it's going to click, right? The light bulb will just go off and say, this is the chart for me. I completely understand what's happening in the market. And sometimes it's going to be a range-based chart. For other traders, it's going to be a time-based chart. They want to know, right? If you're looking at a range-based chart, that if you move a certain amount of ticks, a new bar is going to form. Okay, so you could sort of figure that, okay, like right here, right? Okay, yeah, if we break above 29, it'd be bullish. If we break below 20, 6 3/4, it would be bearish. Whereas on time-based chart, you could even have a little clock on the bottom, like I got here, just showing how much time has left before the bar closes and the next one forms. Okay, so again, at the end of the day, you got to figure out which chart is best for you and your own trading. That's part of the trading journey. All right, everyone. Again, I go off on these rants sometimes, but it's one of those things that it's important, because the chart is, is how you're making your money, right? So you want to be able to look at a chart that you understand, right? You can't look at a chart, and if you don't understand what's happening, what's the point of looking at that chart? Okay, so like on a time-based chart, yeah, I got a thin print here. I got 1, right? I can just draw that line there. So okay, yeah, this is a area of interest to me. If this market, we're selling off, maybe we come back up to that level, and we could come away from it, right? We come right back to 28.5. We'll trade it back down to 27, right? So again, what you're going to do, right? If you have my software, is you go through some of the tools, and you're going to add and put things on there, right? You're going to take things off. That's going to help you understand what's happening in the market better, right? All right, guys, I'll end it there. Thanks for suffering with me. Catch you on the next video. Bye-bye.